There's a lot that's happening in both the spot gold and silver markets, new highs, etc. And I get all the time the question about the gold and silver ratio. So that's what we're going to talk about today. And of course, there's no question that's off the table, but let's just dive right in. Because I can tell you one thing, but pictures say 1,000 words. So this is, in the beginning, that 20th of an ounce of gold to 1 ounce of silver to a silver certificate, all in circulation at the same time at the same stated value. This takes you all the way back to 1693. So, you hear a lot about the 15-to-1 ratio. Well, that was from 1693 up until shortly before 1913. When we had a little bit of a shift, but that was the norm. And you can see it stayed very steady for 15 ounces of silver to 1 ounce of gold. But then there was a pattern shift. That's why I always talk about the pattern shifts, because you don't need to really understand exactly why something is shifting. When it shifts, it gives you a heads up. And we could see that pattern shift that happened right before 1913. And there you go. Then we're off to the races, because that's when it shifted to that 20th of an ounce of gold, this itty bitty piece, to 1 ounce of silver. And when I'm doing the fundamental value, I do it from 1913, that 20th to 1. What it's going to be, I don't know. But let's look at this more closely, because you can look on this chart and you can see when it hits a bottom and also when it hits a top. So 1940, that ratio was 100 to 1. And then, of course, it drops back down to 17 to 1 and then back up. Right? And testing it, 91 to 1, etc., and on. And we're going to look at this more closely just so you can see these patterns and as they've shifted. And so by, 2020? And really, if you look at the dates on this, what was happening? These were big, major crises. In the 40s, we had the war that was really erupting in Europe, and the U.S. became, in a little bit later in the 40s, the world reserve currency. In 1991, that hit a 91 to 1 ratio on it. What was happening in the 90s? There was a major transition that was happening, and we see it in the banking sector. I mean, I could take each one of these dates and draw a string of what was happening in the financial system at those periods of time, but there's typically a crisis, and in a crisis, we see more of a shift toward gold as the primary currency metal. And when we're looking at where we are today, or at least when I pulled this on Friday, we were at a 58 to 1 ratio. So it's dropped very substantially, because there are times when spot silver is moving faster than spot gold, and vice versa. So we're going to look a little bit more deeply. So we get rid of the 15 to 1 piece, and now you can see this a bit more clearly. But I also wanted to show you the average over that time, and the support levels. That's what I'm showing you here. See, that broke a support level. That's why I circled it. And it did it again there. It hit. All right. Let me kind of back up to do this a little bit more clearly. Technically speaking, support is on the bottom. So you see that ratio hit the bottom and then bounce back up. Resistance is on the top. So it hits the top and it bounces back toward down again. When you see a pattern shift, it's because it either goes below that support level, which means it's likely to go lower, or it's going above the resistance level, which means it's more likely to go higher. So that's why I wanted to show you this, because where are we right now? What can we anticipate? Let's get there, right? Because look at it, it broke that 50-to-1 ratio back in 2011. Right now at 56-to-1 or wherever we were, I think it was 56-to-1. I would imagine this would be telling me as a technician that because at the same time in 2020, we broke the upper resistance level, right? So quite honestly, it's telling me that it could either go back down and test that 20-to-1 ratio, and it could go back up and test that, well, it'll go past that 100-to-1 ratio. We don't know. Time is going to tell us which way or the other, but we can pay attention to where we are right now. And at 56-to-1 or 58-to-1, whatever that ratio is telling you, let's see if it goes down to bounce on that 50-to-1. If it does and it comes back up, then it's more likely to go above the 100-to-1. If it doesn't and it continues going through that level, then it's more likely to test that bottom ratio again. So that's why pattern shifts, and I talk about them all the time, because they help you see what is the next most likely outcome. I can't give you any guarantees, but frankly, when I go to these technical levels, it really doesn't matter what you're looking at. You could be looking at stocks, you could be looking at interest rates, you could be looking at confidence levels, you could be looking at ratios. It doesn't matter. What you should always be looking for, and it's simple, you could just take a ruler, a straight edge, right? Pull up a chart. Put a ruler to it. See, you can see for yourself. It's not rocket science. It's actually really simple to do. Print out that chart and just draw a straight line up, down, whichever direction the lines are going. And then that helps you understand what is the next most likely outcome. We're going to know this soon because it's testing that level. But I want to take you on a little bit of a journey to help you also see that. And that's in this relative performance chart. Any of you can do it. I've shown you how. I've done videos on how you can do this yourself because it's on stockcharts.com. And you can pull this up and you can compare anything that you want. It's relative performance. In this particular case, spot gold, which is that blue line, to spot silver, which is that red line. I can't control the color of the lines, or maybe there's a way to do it, but I don't know how to do it. But this is the relative performance. And so you can see back in, what was that date? 99, when we had actually the first derivative explosion, but we'll just stay here for today. And you can see how both spot gold and silver kind of followed the same trajectory. And then we saw a greater move above it back in 2011, right? So the financial crisis became apparent to everybody in 2008. It was happening before that, but the public couldn't see it. So there was a flight to safety, and you can see that spot silver reacted more than spot gold did during that period of time. But that's also when there was a pattern shift, and you can see how both of those lines kind of trended afterwards. In, 2020? Then you can see how the spot silver, that red line, moved up much more quickly. So there are definitely times when spot gold will move faster than spot silver, or spot silver will move faster than spot gold. And you can go on this relative performance chart. Anybody can. You can do this for free. So you don't even have to sign up for it. Just at stockcharts.com. And didn't we do a video on how to get to the relative performance? I'm pretty sure we did that at one point.
I think we just showed them how to navigate it. We didn't, like on one of the lives, we didn't make a separate video of it.
Oh, you know what? Maybe when we're done here today or first thing in the morning, we can just do that. It'll take less than a minute for me to show you how to do this on your own. My personal goal is to translate financial noise into understandable language and give you the tools that you need to make independent, educated choices that put your best interest first. Because at the end of the day, let's face it, you are the one that's going to reap the rewards or suffer the consequences of any choices that you make. So let's just make them educated. And this is where we are right now. And you can certainly see pretty clearly that red line, that silver has moved exponentially faster than spot gold in this longer term relative performance chart. And this is just another one, a shorter term, where you can see where that diversion really took place, right? So this is everything this is about, is giving you the tools to make educated choices. And if I don't think we've done one. So we'll get that done. Just look for it tomorrow. It'll be less than a minute. It's not going to take very long. And this is the gold to silver ratio since the beginning of 2025. And you can see how that has gone down, right? From 105 in April of 2025. So testing that resistance level on the top to whatever it is right now, 66, 68 to 1. But I've also told you many times that we will see that ratio grow more narrow. And then once we go into hyperinflation, then it changes again and it'll grow wider. So I pulled up the data from Weimar Republic in Germany, and not because that's the worst case, but because it's the most well-known case. And this is the data that I pulled on what happened to spot silver during that period of time. So this is 1919 and 1923. And it went from about 150 marks to an ounce to, let's see, hundreds, thousands, millions, billions, a trillion marks per ounce of silver. So it definitely enabled you to continue to buy food and whatever else you needed on a day-to-day basis. And it's why I like silver for barterability. But here is what happened to gold during that same period of time, or the spot gold market. Same period of time. That started out at 110 marks per ounce of gold and went up to 10 trillion marks per ounce of gold. And by the way, guys, is this really gold and silver going up, or is it the mark going down because of all of the money printing that the government did to pay for all of the spending that they weren't earning? It's the same thing today. And this is, for that period of time, the silver to gold ratio during the Weimar hyperinflation. And you can see that it definitely did go down, right? It was 15 to 1 in 1919, 11 to 1 after that. By 1921, it was 40 to 1, so it had gone up substantially. And here you go, just like what we're experiencing today, spot silver moved up faster than spot gold. Both of them were moving up, but spot silver moved up faster, took it down to the 25 to 1, and then it was off to the races at the end of this, and it ended up at 100 to 1. I can show you more examples, and if you want them, let me know. I can do a whole piece just on the silver gold ratio during hyperinflation. And if that's something that would be interesting to you, I could put that on my very long list of videos to create. But essentially, I wanted you to see where we are, because I never look at silver or gold as a trade. If you want to look at it short-term trade, there are much better vehicles than the physical markets. Really, don't do that with the physical, because there's timing, and then there's also the fees involved and all of that. There are cheaper ways if what you're interested in, or even partially, because it never has to be all or none, if you're looking to capture this. And now you know, I mean, go back. Oh, let's see. I don't think I have to go back through each one. So this is kind of like a pain in the neck, but I'll do it quickly. I think it's the one that I want before this. Yeah, this one. Okay. So if you're thinking about doing this as a trade, pay attention to, and you have the links to everything anyway, so you can actually even go onto long-term trends and pull this particular chart. See if it breaks below that 50-to-1. If it does, then it's more likely to go down. If you're thinking about this as a trade, then this chart is the one for you to pay attention to. If, however, you're thinking about it like a strategy, which is the way I think about it, then what I'm really looking for is function. And the problem is since there is a finite amount of gold and a finite amount of silver, you want to make sure that you have the right kind of gold and the right kind of silver to perform whatever it is that you are wanting to do. And so, you know, that's entirely up to you. We at Zang Enterprises are here to support any and all of your efforts. Even if we can't actually execute that piece for you, we're going to make sure, we're going to do our best to give you whatever tools you need to make those educated choices and to help you. But I suggest you give us a call and you have that conversation. And remember, we're going to put your goals first. If your goals are trading, we need to know that. But this is probably not the right thing for you if you're trading, because you don't want to do trading with physical. It just doesn't make sense. So now I hope that answered a lot of the questions on the gold-silver ratio, and it's something that you can refer back to. It's something that you can look at over and over again. And beyond that, every single strategy specialist at Zang Enterprises can have access and does have access to all of our, to all of this data, so they can actually go through this with you themselves on a slower basis. Okay? And however we can be of service, we are happy to be. But let's all join the sound money movement. Whatever your bent is, we all want money that retains its value, right? And we certainly want it into the future. Can you take a politician's or a central banker's word for it? Their job is to lie. Gold makes them say the truth. Redeemable gold. We can do this. 3% of the population, we can do this. And until next we meet, please be safe out there. Bye-bye.